I came across a for sale by owner listing recently that had a very interesting property description. Actually, there was no description. It simply read, "If you need to finance it, it's not for you." Yikes. Now that line might sound highfalutin, but in reality, it shows a pretty big misunderstanding about how high-income buyers actually purchase real estate. I know you're probably trying to eliminate lender risk, but stay with me for a few minutes and I'll show you how loans for higher-end homes may not be so risky. Plus, I'll show you how you are shrinking your buyer pool, therefore shrinking competition for your home, which in turn yields the least amount of money. High-income buyers often use loans on purpose. Many affluent buyers absolutely can pay cash, but they often choose not to. Why? Because cash has opportunity to make even more money. If someone has $1 million in cash, they might prefer to keep it invested in higher yield options, use it in their business, purchase additional properties that cash flow, or to maintain liquidity. For example, a savvy investor might get a mortgage at 6% but earn 10 to 12% deploying that same money elsewhere. They're not going to tie up hundreds of thousands of dollars in a home's equity when they don't have to. Leveraging cash allows them to control the asset, in this case, a personal home, while keeping their capital working elsewhere. That's basic financial strategy. Enter the jumbo loan. Once you get into higher-priced homes, buyers often use what's called a jumbo loan. Jumbo loans have stricter requirements than regular mortgages because they're not backed by Fannie Mae or Freddie Mac. Typically, they require higher credit scores, larger down payments, more documented income, and substantially higher cash reserves. In other words, the buyer must be even less risky than a typical buyer of a middle-class home. Eliminating financed buyers doesn't make the property more exclusive. It just makes it harder to sell. Many extremely qualified buyers prefer to finance strategically, and cutting them out of the equation doesn't filter for wealth. It filters out competition. And less competition means less money in your pocket. Sophisticated sellers focus on the buyer's ability to close. The real question isn't, do they have a loan? The real question is, can they close? A strong buyer with verified financing, solid reserves, and professional representation is often far more reliable than someone who simply claims they'll pay cash. If you're selling a property, especially a higher-end one, the goal isn't to impress people with exclusivity. The goal is to attract the most qualified buyers possible. Sometimes the wealthiest buyers in the room are the ones using financing, and they're doing it intentionally. A word on cash buyers. Cash buyers can close faster, but they typically want to pay less because they know full well they don't come with lender risk, and they want a discount for that, which means you're paying for that privilege. Another misconception is that cash guarantees a closing. A cash buyer can still change their mind, find another property, decide the inspection isn't worth it, or simply walk away during the inspection period. Cash doesn't mean committed. When a seller writes something like, "If you need financing, it's not for you," they may be unintentionally signaling to sophisticated buyers that they'll be difficult to work with, and that can actually discourage the exact buyers they were hoping to attract. The goal isn't really to look elite or exclusive. The goal is to get top dollar. And that starts with keeping the door open to every qualified buyer. Learn more selling and buying strategies at listingsforone.com.